Hello, friends. James Stevenson here with a fresh episode of Who's Hating Hard on Tesla Today? Once again, it is a Tesla short seller being interviewed on Benzinga. I'm going to roll the Who's Hating Hard on Tesla Today sizzle for, I'm going to call him Lekander. I don't know if that's how he pronounces his name. Loki, do you know if that's how that guy pronounces his name? Loki says he doesn't know either. But I'll share my desktop with you and show you how I became aware that this article existed. It was a tip from Sue McLean at DCCW Rules, tagging me with HHHTT question mark, which we all know means, who's hating hard on Tesla today? That's right. So back we go to my desktop to show you the link she shared to Benzinga.com with an article headline, Tesla analyst explains why EV maker is going to prove to be the next Enron. That's the old standby, that old chestnut. They break out every few years. Tesla's going to be the next Enron. If all else fails, just say Tesla's going to be Enron. I replied, I'll give it a look, Sue. And then I replied again, Benzinga is such garbage. It is. Here's the screenshots for anyone who doesn't want to suffer through their aggressive pop-up ads. Yeah, that link exists. You can go find it if you want. But fasten your seatbelt to be assaulted by pop-up ads. That's what you get on Benzinga.com. I'll just read you this article. Why not? Let me scroll this over to the side so I can read it on my big screen, since they're all this shape, and I'll put it back when I'm done. Tesla shares saw a bounce last Thursday after CEO Elon Musk hinted at shareholders' overwhelming support for his 2018 compensation plan. However, the shares pulled back sharply on Friday after the approval was officially confirmed. A bearish analyst delved into the investment worthiness of the stock in an interview aired last week. Hugely dangerous. Tesla's the biggest stock market bubble in world history, and we have just seen the start of it, said Lekander, Clean Energy Transitions CEO and portfolio manager. It's like an act of Congress. Whatever the title is, it does the exact opposite of whatever it says. This is an image, so I can't highlight this text the way I want to. Clean Energy Transition. This is definitely an oil company or something. They have some incentive to hate Tesla because they are short Tesla shares. This company is, which you will see proof of in just a moment. I'm not just making it up. And you won't see it in this article, I don't think. Maybe we'll see it. I'll read you every word of this article. You tell me if they disclosed that Lekander is a short seller. In an interview with Yahoo Finance, he said Tesla's models are outdated, the valuation is insane, and earnings are plummeting. The Tesla bear said he estimates earnings to fall 50% this year. The consensus estimate for 2024 has dropped from $5 at the start of the year to $2.65, he noted, adding that he estimates $1.40 per share. The analyst has a $15 price target for Tesla. So, 1/10 of where it's trading right now. Exactly the kind of person you would think would short Tesla stock. Lekander also flagged other risks, such as class action lawsuits and questions regarding the Tesla board paying itself enormous money. I think this is hugely dangerous, and in the end, it's going to prove to be the next Enron, he added, because he had nothing more intelligent to say than Tesla is going to be the next Enron. The Enron parallel was previously used by Dustin Moskovitz, who you may remember from the Social Network movie as being one of the original founders of Facebook, who Zuck shoved out of the company, who expressed uneasiness over cooked-up data regarding full self-driving capabilities. The infamous Enron saga stemmed from the company inflating its financial performance and hiding billions in debt with complex financial instruments, none of which Tesla does. That's where the similarities are. This eventually led to one of the biggest corporate scandals in US history. It's so similar that Tesla isn't doing any of the things Enron did. Retail prop, Lekander said that retail traders are holding up the stock right now while the broader market is up about 20 to 25%. Tesla has fallen about 60% this year, and the downward spiral is materializing step by step, he said. Well, all stocks are down from their all-time high, except stocks that are at their all-time high. People who've been invested in Tesla for 5 years are very happy with their returns, but a short seller doesn't want to say that, so they pick a time when the stock was high to compare against. Obviously, that's what you would do if that's your narrative. The retail crowd needs to give up because that is what is holding up this stock, which in evaluation makes absolutely no sense. If you wonder what FUD stands for fear, uncertainty, and doubt. What do you see in this paragraph? The retail crowd needs to give up because that is what's holding up the stock, which makes absolutely no sense. That's fear, uncertainty, and doubt for you. This is what short sellers want to provoke in long investors. They want to provoke fear, uncertainty, and doubt that will motivate longs to sell. Why? Because then they'll be able to cover their short position at a lower price and make a profit. They make money. The more fear, uncertainty, and doubt they can successfully propagate. Adding, he sees the stock going down further due to downward pressure on the bottom line given the cyclical impact of the company's price cuts. Lekander said first quarter had terrible deliveries, but not bad earnings. In the second quarter, the company did everything to boost car sales, including offering financing at nearly 0% interest. We've never seen an automaker offer 0% interest before. He also raised the specter of the company making a loss in the second quarter and potentially in the third quarter. I think many fanboys will run for the hills. He fudded. Tesla ended Friday's session down 2.44% at 178, according to Benzinga Pro Data. All right, so let's get out of these screenshots, and I will widen this back to its original proportions before scrolling down to show you this reply from Joseph Yan. At Joseph Yan 6, he is one of the Tesla short sellers, which is very helpful for me to see this retweet of trustworthy source of information, Alexandra Merz, thanked by Elon Musk at the annual shareholders event. At Tesla Boomer Mama, if you're not following her, I don't know what you're doing following me and watching these videos if you're not following Alexandra Merz. Here are the top 30 net sellers of Tesla, end of March 2024, and below, end of December and September 2023 for reference. When you see four numbers, equity, call, put, and net, these firms have a mixed approach. The ones only have two numbers are the pure shorts. So let's take a look at this. Here is Sessa Capital, number one. They are a pure short. This is $1.6 billion net short. They have no long position via equity or calls. They're just short $1.6 billion worth of Tesla. What about these next few? Millennium Management, Peak 6. They have partially hedged their short position. Yes, they're $1.9 billion short over here, but they also own call options, which is a bullish position. And they also own some shares. So maybe they've already bought back some of the shares that they purchased and they're still holding them. No, that's not how that works. They, after covering their put position, they would have had to buy longs. This is a true hedge of their short position, owning some shares against it. So they can play both sides that way. What do we see on the clean energy transition row? They are the fifth highest short seller. It's ranked by the net position here. So they have a $342 million bet against Tesla, and that position is unhedged. So like Sessa Capital IM LP, they are naked short. They have no hedge against their short position. So they need this stock to go down so they can cover at a lower price, make a profit, and get themselves clear before it blows up in their face. The worst thing that could happen to them would be that the stock price keeps going up. And at some point, they have to throw the towel in and lose money buying back these shares at a higher price. exactly what did happen to short sellers who got their faces ripped off in 2019, 2020, and 2021. All right, so I replied, nice catch. That should have been disclosed in the article. I didn't see it. If you saw it, leave me a comment below telling me that they disclosed a $342 million short position being held by the firm that employs, per Lekander, the person they interviewed in this article, about Tesla going to prove to be the next Enron. What do you think of that article, Loki? Loki is nonplussed by the article. All right. If you enjoyed this video, remember to click the like button. That will help the algorithm. That will help the algorithm, if I can speak, to recommend this video to other people who may like the same video you just liked. And a special shout out, as always, to my two executive producers, Kathy Kitchler and Rebellionaire.com. And I'll see you in the next one.